All right, good morning and welcome to the Business Lens. My name is Faith Daffa Joseph. And yes, this is a show where we get to discuss everything going on in the world of business. And that's talking about whether you're looking at stocks and the capital market, or you're looking at economic policies that are going on in the country. What exactly are they? How do they relate to you? We get to talk about all of that here on the Business Lens. And it happens, of course, Mondays and Thursdays. This is the first episode, and I'm very, very excited and delighted to be here and to share all of that with you. And hopefully, you know, this journey that we're starting today, we can go on with it for a very, very long time. Okay, like I said, 3 different segments on the show today. First, we start off, of course, with the business news stories. We'll look at stories trending in the world of business, a couple of them that we're going to look at today. And then right after that, we get into what the stock market is saying. Which stocks should you be looking at? If you are invested already, well, have you claimed your dividends? That is the other part of the conversation. And I have some amazing guests that are going to be doing justice to all of this with us on the show. Starting, of course, with the business analysis, let's talk to my first guest here, Mr. Daniel Effa. Welcome to the show.
Good morning, Faith. Thank you for having me.
Okay, so we have a number of headlines that we are going to be looking at the different stories that are trending or that broke over the weekend in particular. Whether you're talking about what's happening in the world of oil and gas, we know that because of Dangote, there is some sort of revolution that has happened in the downstream sector. And then if we look at also what is happening with the banks as well. Okay, and I think we should start with the particular headline, and that's talking about, you know, well, the banks now telling us that we can spend our money abroad. So I think it was sometime in 2021 that there was a pause on this. Yeah. I remember clearly because I used to do a lot of shopping with my card, and then all of a sudden it couldn't work again. And the part of that is FX liquidity, right? Let's break that down. How we have now come to this place where we have our cards working once more. So looking at that headline about GTB, UBA, them resuming international transaction on Naira cards going forward. Let's talk about what that means and how we got here.
So I think that it also started like 2021. I think it's even before 2021. The restrictions was about maybe 50,000 annually, and it moved to like 500 monthly before the eventual ban. So the conversation has always been the fact that CBN says that Nigerians are spending on relevant things, like things that are not economically viable, and it's putting pressure on our reserves as a den. So that was what initiated the conversation that we got here. So in that 4-year period, what has happened? We've seen fintech come up to play in that space. We've seen crypto conversations in that same space. So that has contributed to what the gap, the liquidity gap, the pricing gap that we finally saw, where we had 2 separate markets. We had one with the official level, we had the unofficial markets, and it was a big issue in bringing them together. But we've seen what the CBN has been doing since it started in terms of the current CBN dispensation, that let us structure this properly. Let us have a proper market where we can actually have wholesale and retail, right? And that is what has led us here, right? And that is why the beauty of this is that the pricing becomes closely the gap becomes very close, that it now makes sense in terms of us being able to properly ascertain how much is our monthly what is the pressure like on the dollar, what is our expenses like, right? So 1,000 is a good start, right? So that all the transactions, all those things that Nigerians would mini exports can easily or mini imports can easily be done. Businesses can easily get. So it would even have an effect on the inflationary pressure at the end of the day. Because.
But let's talk about where fintech's coming here. You know, Nigeria is a very, very peculiar country where a problem comes and then a solution comes for it. A problem that is created sometimes by government, sometimes you know, policymakers mostly. And then, you know, you have people develop solutions And then the policy is reversed, and all of a sudden it feels like that solution is now redundant. So let's talk about where fintechs coming here. So fintechs came in because people were unable to use their cards.
Yes.
So a lot of fintechs started playing in that space. Now that the policy has now been reversed, we have better liquidity. That's just what this means, that we can afford to spend a little more, right? Even though you have different spending limits for different people. What happens to the fintechs that I decided to play in this space?
So, so I think that this is one of the issues with a country like ours, because I was looking at Kenya, I was looking at Ghana. They don't have these issues like this. So some certain businesses in Nigeria would not really function if everything was right. And that was basically what happened even with the BDCs. The creation of the BDCs in the first place was because of a similar chaotic approach, right? So why should I want to do something? I have to go and get dollar in cash to travel, or why should I want to make a transaction that I have to look for an external fintech app to get that thing done? It's actually an anomaly. It is not a normal thing. So those fintechs will have to rebrand right now, because then, even though the demand is still there for them, because $1,000 is still limited to some certain kind of people to. But
they're varying limits, because there are people who are saying that they have a $1,000 limit.
Based on their account size and transaction and all. So, so we will still have that, but if you want to look at the generic number, it's still 1,000, right? The fintechs will still play, but what it will do at the end of the day is that it will bring the overall premium that is being paid by the users considerably down, because then if the rates get at the EFEMS window is maybe 1,500, for example, you cannot give me a 1,530, because then I can easily use my card to make the payments.
Exactly. So it's good news
overall. So the only thing at the end of the day right now is that this should not be a one-way thing. It should not be a spending thing alone, because the whole idea of the FX market is that we also are able to get in inflows at the same rate we spend, right? So I'm looking at the entire market. I'm looking at the fintech that you cited. I'm looking at the other platforms where people do their remote work and all. We're looking at crypto exchanges. Combined, this can give us over $5 billion in annual annual remittances, right? Because then you can calculate it. So this should not be a one-way thing. People should also be able to receive funds. Right? Should be able to also receive funds using your same Naira card.
Your Naira card. Yeah. Let's quickly move on to another headline. This is very interesting, because for a long time we've had a conversation about what is the actual cost of the Naira, right? What is the actual value of the Naira? We've had different postulations at different times, but now we're seeing this particular story. It was on Nairametrics talking about the Naira to break below 1,500 Naira resistance. This should be good news, because there are a lot of people pushing, of course, for stronger currency. There are people like you who've argued, we had the conversation before, that exchange rates should not be a problem if we are productive and if we can export, because that makes more money for the Nigerian producer. But then, we know we're not there yet. We're making strides, but we're not there yet. But let's talk about the story. So the Nigerian currency, which we're talking about, they're saying that it might break the key resistance of 1,500 to $1. Right now, it is trading at 1,500, 528 to the dollar. That was on Friday. So, do you see this changing? And what are the fundamentals that actually led us here? Considering the fact also that this also rests on liquidity.
Yes.
So, can we say that we're getting more forex? That's why we're seeing this happen, and the Naira can actually become stronger.
So, I think it's a function of availability of liquidity, one, and also I think a function of structure. The distortions, the difference in pricing, the distortions is what actually gives the price new levels, right? But if there's stability and the CBN is total control of the price of the market conditions or market activity, it gives rise to less speculative measures, and people are actually then doing the actual trading. So yeah, with the whole dollar spending, conversation, we're looking at it actually doing below. But however, I'm not too bothered, because like I usually say, I'm not really concerned, because a cheaper Naira is even better for exports, right? So more often than not, if with this policy, if it is a two-way conversation, people can actually even earn more dollars. You get, and it's better. So for us, right? If you look at it technically, right, because it has ranged on that 1575 for a while, the likelihood it would break below. But breaking below does not signify that that it will be sustained for a long time. So I think what we should be, but at least for the past 6-7 months, we've ranged between 1.5 get in terms of the rate. So that is good enough, and that is kudos to the CBN for at least being able to get us to that point of stability, which we really crave for. Whether it breaks below is what we are going to be looking at, and that will be a function of liquidity. Let's see what happens in the coming days, basically.
I mean, because all of this is definitely about, it's a liquidity problem.
Yes.
So let's see how that works out. The CBN is rolling out all of these particular policies, and people are happy about the fact that CBN is working. The monetary policy doesn't seem to be a challenge in this present administration, as the fiscal policies that we're expecting to complement it. But let's move on to another headline. And this is interesting because I know that this conversation is one that we have had on different platforms as well, and that's talking about the NUPRC is putting out this. It's not news, right? But you know what? Let's treat it as news. Saying that our producers resisted crude supply to Dangote and others. This is something that we all knew about. Dangote made a lot of noise about it when it first came in, before we now had this crude naira policy that the government is saying that it is sacrosanct, it is not a one-time thing, it is something that is continuous. But before the government even said that, we saw the resistance from NNPC, you know, saying that, you know, this was a one-time thing, they were discussing the modalities and all of that. But now, you know, because if you look at the Petroleum Industry Act, that also carries the fact that you are supposed to supply crude to local refiners. And these people tried to move on. In fact, one of the things Dangote complained about, if you remember, was talking about the fact that they were asking him to pay above market price, just to be able to supply him. Exactly. And we saw Dangote start to, you know, buy crude from international players. He's still buying, actually. But the NUPRC is coming out with this news saying that they were resisted by several IOCs that didn't want to supply Dangote or local refiners, even though it is in the Petroleum Industry Act. So now, where does that leave us? Because they're talking like this is something that they tried to do. They tried to domesticate it. It met resistance. But have they settled it?
It's a very sensitive issue. And because, of course, I'm not a major player in that field, but at least you understand basics of business, that for the fact that there is a law, the domestic crude supply obligation that is there, saying local producers, this is what you should be delivering, right? However, it is a law, but when you look at the dynamics of the business, right, does the law favor the business that operates in that space? That is where we really need to talk about, because crude oil is not, it's a dollar conversation. It is priced in USD, right? So is there any incentive for me having, you can't just make a rule. It has to be, it's a business. They are running based on agreement. They have partners all over the world that they supply these products to. So if you're saying,
and sometimes agreements have been made ahead
for
of
years.
time.
We, for example, we have crude oil swaps that we've done for years. So no matter what you tell me about supply, we'll still have to pay those obligations. So,
absolutely.
So those companies, those IOCs, they have those things. Right? So if the conversation is about, yes, the law says this, there are two issues involved. It's either there is an incentive that, okay, for you meeting your quota of domestic obligation, this is what gets to you, right? Or this should be priced in the same pricing you get from. So if, for example, Dangote is saying they are pricing it higher, then the question should be, why is it priced higher? Why shouldn't it be priced the same way you price to sell to your partners you get across board? So that alone, that should be a conversation on one part, right? Then also, crude for naira, it is not really clear. We don't have a clear-cut conversation around crude for naira. If what rates would be used, right? Will these rates favor the IOCs? Because then if you're giving them naira, we also give them the dollars when they're repatriating their funds out of, because they're IOCs, they're not local businesses. So when you look at all those dynamics, it makes it difficult for you to completely lay the blame on I mean, but the question also comes on for NNPC as well, because if you're not meeting up the obligation, why do you want the IOCs to do that for you? Yes, so NNPC, of course, it's a JV, so that means that there is a certain percentage of whatever comes from the IOCs that the NNPC takes. And this is the issue. We are in a fiscal what was it quagmire we use, because we need FX earnings. We need a lot of FX earnings, and you would not want to risk that for local supplies, right? Because that dollar in that reserve is very important for us at the moment. So now, this is where it gets interesting. Dangote, for example, our crude is one of the most expensive crude globally. So either way,
but it's also sweet crude, right?
exactly. But either way, and because it is for local consumption, either way, it is expensive, right? And no matter what we do at the moment, we can't even meet his own demand, right? So at the end of the day, we still need to fashion out a way to ensure that he still imports cheaper crude, and while we export what we have, right, and get the FX earnings.
But now, here's where the pivot is coming from that people have suggested.
Yes.
See, because all the while we even done swaps that the NNPC has done. The swaps always just result in us getting petrol and diesel when you have other variants that you can get from crude oil, right? So one of the things that Dangote, having local refiners, can do for us is that we can extract all of these other variants, right? And be able, whether it's bitumen, whether it's petrochemicals, you know, we can extract them, actually sell them. So the conversation, there are experts who think it should move from just exploring crude and selling it to selling refined products, so that if you give your local refiners enough crude, what it means is that they're able to refine, get out all of these other variants and export it. So you're actually exporting finished products and still getting the same effects that you need.
I also agree with that conversation, but I think that for this level, I think it's advanced. Why? Because Nigerians are so sensitive about what petroleum prices are, and I think that is what is bringing us here majorly. A refinery sets up, other smaller refineries also sets up. They don't have supply, right? And there is a supply issue. We feel that the dynamics is, we have it at our backyard. Why can't we just supply it, right? But then there is a pricing dynamics. There is so many other intricacies involved. And that is where, for me, the solution would have just been, and the reason why it is this difficult is because we are not even meeting our OPEC quota. If we are, and maybe there is even a surplus, we can now begin to meet OPEC. OPEC, please, we have demand for simply local consumption, not exporting that would cause, that would increase the risk of glut, right? We have local supplies, local demand that we want to meet with this, right? So if we do 200,000, 300,000 above our quota, it makes sense. But now we don't even meet the quota. So what? So the demand. So even for the federal government, after paying the swap
and the loan obligations,
you are left with what almost you have nothing to sell.
Well, so, because of that, let's leave that question there and talk about the petrol pricing summit very quickly. NMDPRA is trying to show workings, and they're talking about having a petrol pricing summit. It's very interesting because they're doing it now, and they're saying they're trying to get all the stakeholders on the table and have a petrol pricing summit of how much the price is supposed to be. There are people who think that our petrol should actually be priced at 750 or 700 naira per liter. I don't know if we're living the fool's paradise when we talk about that, but this is supposed to happen at this month. That's between the 23rd and the 24th, a 2-day summit. I think also because Dangote has been the one declaring, well, dictating pricing for the downstream sector. I mean, he's introducing this sort of transportation, he's getting into logistics in the downstream sector. So that is totally destabilizing the sector. And now they're doing this. How do you think this works? Is it because of Dangote or something else?
So at the end of the day, I think it's a function of the number of times price changes, right? Before now, when we're in subsidy era, probably would have a price for petrol for months, sometimes even for years, right? So the constant change would have a play on the economy at the end of the day. So having a pricing conversation means that, okay, let us sit down, right? With all the stakeholders, please sit down. What is what are the issues? Because when they start citing these issues, you will start from supply, right? From supply down to the marketers, down to the product itself. Those are the things that will should be discussed, and a conclusion should come. Because if some of the people are saying the pricing is 750, where did they get that information from? Who has data? Does NMDPRA ask that information? Do they have that data? Who are the ones? What and is
why is Dangote? You know, all of this pricing that Dangote is doing. Why is it doing? Where is it coming from?
Because if you look at if Dangote, for example, gets the desired stock that it needs, for example, or other refineries also, realize that no matter what happens in the international market in terms of crude oil prices, the effect will not be so fast.
We can
the
stabilize.
Pricing would not be so fast. So if, for example, I have a demand for, I have a stock for a month or two, even if price goes to $100 per barrel, I should still be able to have a stable pricing till the next.
Exactly.
Because crude oil, most of them are pricing futures. So when you look at those dynamics, I think it is important that this kind of stakeholders conversation comes up. In fact, not just even for the NMBPR, any other stakeholder, any other agency in Nigeria that has something to do with the real sector should have something like this and bring all the players involved and let them talk, let them have conversation, let them come to an agreement and see how we can actually move forward.
Well, let's hope that it also does not destabilize the fact that we have a deregulated market. Well, yes, because when you start to set pricing, then you know it's almost conflicting with the idea that you have a deregulated market, that the market's supposed to dictate prices.
We are really getting that thing extremely confused because then
we're confused where that is concerned. But we're going to move away from the headlines now. You know, of course, we have other things coming up on the show. First, we're talking about the stocks that you should be buying, the stocks that are making money in Nigeria. There's not a lot of retail investment when you're looking at the Nigerian capital markets. That should change because we have some really good news for you where that is concerned on the other side of this. So Daniel Office is going to be with me as we look at the stocks that are making money, the companies that are making money in the Nigerian stock exchange market. So stay with us. It's still the Business Lens here on Rapid TV.
Correro, your front row seat to the most pressing issues from the corridors of power to the heart of our communities. We bring you unfiltered insight, fearless journalism, and the conversations that matter. My name is Iheanacho Prince, and I invite you to this big conversation table as we analyze the top stories, ask the tough questions, and hold power to account. News that informs, analysis that empowers, debate that drives change. Correro, the big conversation, every weekday at 7 p.m. only on Rapid TV.
Hello viewers at home, this is D Olumighty and I'm here at the Masterminds Maiden Edition and our audition today. This is the platform where we give young mind kids from the ages of 7 to 17 the platform to express their feeling and to showcase their talent.
My name is Uzo Emanuela
Sadiq Labran Abu.
Jessica Prince.
My name is Hollywood Lee.
Sarah Angela Achanaga.
My name is Gold Aisha.
Special Sodimu.
I'm Tarila. I am Paris Aban.
Just not Julia.
Let's go.
It was amazing.
It was splendid.
Mastermind.
All right, you're still watching the Business Lens on Rapid TV, and we're talking about everything business, the economy, and of course, what it means for your pocket, what it means for your finances. Talking about your finances, one of the things that you know, Nigerians are starting to get involved in now is making sure that they also are part of the capital market or the Nigerian Stock Exchange, which is talking about being able to know which stocks to buy, which stocks are making money. And so I have the rundown for you. We're going to quickly just look at the stocks that you should be looking at as a Nigerian if you are investing in the stock markets. So like I said, Daniel Office is still here with me. Number 10 that we have here is Coa Nigeria PLC. Well, I think one thing that surprised me here is that I was thinking that there were going to be like a number of other companies at the top 10. Some of them featured later, but I'm seeing companies like Score Nigeria PLC. If you asked me to go, you know, the stocks that I'm interested in, I probably would not have mentioned them, but they seem to be doing really well. Yes.
So the idea is simple, right? For example, because of the space I operate in, right? You would want to invest in stocks that have low PE ratio, like. Because those stocks are particularly seen as undervalued stocks. So the idea is I would prefer to have invest in a stock that was $1 naira and moves to 10 naira, right? Because that is over 1,000%, right? Rather than have stocks that are highly valued at 200, 300 naira and they probably move to 400. So what has basically happened this year is that people have moved away from the top performing stocks last year, the highly valued stocks last year, and simply went into the alternative stocks that the cheaper you get in value, and buying pressure, what it does is that it was increases the
Let's talk
value of the
about
stock.
breweries, right?
Yeah.
First, this is not Nigerian breweries, Champion Breweries.
Yeah.
Heard of them? Anyway, so Champion Breweries, according to what we have, is ninth on the list. They have a year-to-date performance of 162.47%. Open at a share price of 3.81 naira, was sold through the first 6 months. It has had the bullish run between May and June, and they had a really good Q1 2025 results. So this is what we have at number 9, and like I said, some of the ones that you have Presco as well at number 8.
Yeah.
So I mean, any surprises there with Presco?
No, of course. I think we've seen Presco, Okomu Oil really do massive numbers because they are into what's the word, palm oil, right? So the palm oil business, and it has really been the value has really been skyrocketing in the last couple of months, and I think people are basically now seeing those stocks. However, right, based on your top 10, right, these are stocks that have already made the move, right? So what you should be looking out for is for a price correction a bit before going in again. So basically,
okay.
that is how to actually invest profitably in stocks.
Okay, so let's just have a run through for the stocks that are making the round. So we've done number 8, Presco. What is number 7? Let's quickly get through that. So we have number 7 as well, and then of course we have the others. Let's just quickly look at what number 7 is. For us right now. And then Fitson Healthcare it is said to be number 7. They're also doing really great. And then let's look at number 6. Right now, Smart Products Nigeria Limited. Like I said, some of these numbers, some of these companies are companies that you probably don't know about. But yes, you should check out their stocks. Smart Product Nigeria PLC. Then we have Nemeth as well. That is at number 5, I'm thinking. Let's look at number 4, Vitafoam. Okay, now this is not much of a surprise. It's been around for quite a bit. And then from Vitafoam, let's go on to FMN. Well, Flour Mills of Nigeria PLC and Honeywell. No surprises here, right? Yeah. So if you own a stock of this company, you're doing well. Better Glass PLC is also here, and they are at, I think, number 2 presently. So let's look at what is top on our list. If you are buying Nigerian stocks, you should probably start looking at this. What is the top here? As we quickly move on to our last, so Better Glass is number 1. Anyway, stay with me on the Business Lens. We have a conversation coming up talking about how you can address unclaimed dividends and the conversation around it. Thank you so much, Daniel, for being a part of the conversation. On the other side of this, my other guest joins us as we get into the conversation about unclaimed dividends and what the government is saying about it, what legislators are saying, and what shareholders, or people in that space are talking about where that is concerned. Stay with Business Lens on Rapid TV.
Meet the men and women shaping the future of Nigeria. Get to know your representatives at the National Assembly. From lawmaking to constituency projects, we'll take you behind the scenes and inside the chambers of the Nigerian National Assembly. Learn about the bills they are championing, the challenges they are facing, and the impact they are making in their constituencies. We'll also bring you closer to the people they are serving and the stories that shape their work. Join us on NAS Watch every Friday on Rapid Television at 7 p.m. So get informed, get engaged, and get to know the leaders shaping Nigeria's future.
Rapid TV, rooted in truth, driven by impact.
Alrighty, It's still the Business Lens, of course, on Rapid TV, looking at all the top stories and all the happenings in the world of economics, business, and finance. And I have joining me right now, of course, to help us look at this next issue for our conversation that is for, the conversation about unclaimed dividends. We have Mr. Abiola joining us. Welcome to
good to be here.
Investment for Key
to Markets.
Key to Markets. Okay, so welcome.
Thank you
to the show. Let's talk about this, right? Because when I first saw the story, the only thing that came to mind for me really was the fact that this law is not new. It was in the Finance Act for 2020. Why there's criticism now, is beyond me. But let me just quickly run through it so you have an understanding of what it is if you're watching us. So you have the Independent Shareholders Association of Nigeria rejecting this law mandating the transfer of unclaimed dividends to the Unclaimed Funds Trust Fund account. The problem with this, according to the national coordinator, I think what also surprised me here was realizing that we had an Independent Shareholders Association.
Yeah.
There's an association. Anyway, so the national coordinator described the law as a violation of shareholders' rights, a betrayal of investor trust, and a dangerous precedent threatening private property and integrity of Nigeria's capital. Under the Finance Act of 2020, dividends of listed companies in Nigeria that remain unclaimed for 6 years or more, along with dormant account balances in deposit money banks, are to be transferred to the Unclaimed Funds Trust Fund. Now, this fund is overseen by a governing council comprising the Minister of Finance, the Debt Management Office, and other stakeholders. Okay. According to ISAN, they stated that unclaimed dividends are not government revenue. They are legal property of individual investors and their heirs, regardless of the time elapsed. Centralizing these funds under the Securities and Exchange Commission amounts to indirect expropriation and undermines investor confidence. So they're also claiming that there is no clear framework for managing these funds, no clarity on how returns to rightful owners will be handled or how claims will be processed. You saw the lawmakers actually talking about this when the Deputy Governor Bala Bello and Finance Minister Wale Edun appeared before the House of Representatives Joint Committee on Public Accounts and Public Assets, directing the CBN to remit 3.64 trillion to the federal government within 14 days, basically treating it as government revenue because they have not been claimed for 6 years. What are your thoughts on this?
Well, for me, I would like to go back a little. And why I'm saying that is we need to understand how did we get here in the first place. Why should we have this amount of unclaimed dividends? I can assure you without any data that some of the people involved in this unclaimed dividend are still alive and they're very well. But some don't even know. I'll give you an example. Before my dad died, he bought shares and stocks for all his children. We never knew. We never knew. It was some years back. My dad died in 2006. But it was some years back, about 7 or 8 years back, we started hearing that, we started, getting this information that there's a website. You can actually go and check. And we saw for my elder brother, my elder sister, another elder brother. We saw for a lot of people, and we never knew. So the first thing is, how did we get here in the first place? How do we stop whatever process led us to this place, okay? We need to, first of all, find a way to communicate. A lot of these companies have no way to communicate with these investors or these shareholders. 20 years ago, 30 years ago, what we use is post office, address. But we all know now that there's hardly anybody alive right now that doesn't have an email address. But you find out that maybe some of these stocks don't even have an email attached to them. So how do you communicate with them? So let's now come to the present. Now, with what is going on now, I also feel that it is kind of illegal, to, even though it's
a law now, it's in the Finance Act.
I know it's in the law, but it's just the difference between what is legal and what is moral sometimes. Like what was being said, some of these things will kill the confidence of people that actually want to come into the stocks market. Because they'll be like, oh, God forbid I'm in prison for 7 years. By the time I come out, government has already taken over my shares.
Is it the duration? Because if you look at somewhere like the United States, they also do this. In fact, in the United States, they have it as what they do is that you have, unclaimed dividends domiciled with, there's what we call their SEC as well, but it should be there for 12 years. But what is different with them is that you can still claim it.
Exactly. The duration is not the problem. Yes, there's no reversibility. That is the
in
fear.
Nigeria.
Most likely, yeah, in Nigeria, you hear of a bank going down, your money is with AMCOM, go and claim your money. To get that becomes a whole lot of jumping hoops. I think that is the major fear. That, okay, this has gone into a black box. Is it possible for this to come out of this black box if the person that legally owns these shares actually resurfaces? Now, there's this law that if you're missing for 7 years, nobody can find you. You can be declared legally dead. Okay? Now, what happens when somebody that has been declared legally dead comes back from the grave and is now being found? Will that person be accorded the identity that he previously had? Most likely, the answer is yes. But in this case, if after it has been claimed by government, somebody now comes back and says, oh, I never knew, I totally forgot, or for whatever reason, is that person going to have access back to his dividends?
Now ISAN is actually asking for this law to be suspended and stakeholders to be brought in to discuss about it. I don't know if that is going to happen, but do you think that should be the way that they do this? Suspend that part of the Finance Act, even though we have other parts that have already, been taken into action?
Like I said earlier on, there are a lot of things in our constitution. Not everything is being affected because optics also matters a lot. Now, you can't bring out this and say, oh, because it's the law, we must effect it. Of course, you are right. In fact, it's legal. But if you look at the optics, look at everything surrounding this whole thing, you would rather maybe soften a little bit, okay, so that the new investors coming in will have a higher level of confidence that, okay, I can go into the Nigerian stock market and my money is always safe. I think this is the issue, and I think going with the stakeholders, having a round table discussion is the way to go for now. And let's see, the voice of the people, they say, is the voice of...
It's the voice of God.
Yes, voice of
well,
God.
government is looking for money, so you know what? 3.64 trillion is a lot of money.
You remember the case of
PENCOM
issue that they wanted
I know,
to also...
exactly. Well, we can't fund our budgets. So, government needs money.
I don't want to go into this.
Okay, just so you know, as we wrap up, that MindRed office has launched the July 2025 Federal Government of Nigeria Savings Bonds, offering investors attractive interest rates of up to 16.762% per annum. Okay, it's opening today. It will close on Friday, July 11, 2025. So that means that, you know what? Contact your stockbrokers, contact everybody that can help you and get into this. It's still not inflation proof, but it is not bad, 16.762%.
And compared to savings account that will give you less than 4% in a year, it's better.
It's much
better. The whole idea is let your money keep moving instead of just leaving your money stagnant, kept in a place. It keeps losing value. Nature abhors vacuum. There's no stagnancy in life. It's either you're going forward or you're coming backwards.
And you will get this, even though, like I said, it's not inflation proof. Inflation is at 24%.
Semi-inflation.
Semi-inflation proof. Okay, so talk to your stockbrokers, get into this and make some money for yourself. This is how we wrap up the Business Lens for today. It's a very fast edition, and I hope that, you can join us again on Thursday. Thanks to my guest, Mr. Abiola Ajikun, and of course, to Daniel Efa for joining us on the show today. We'll come back to you on Thursday at the same time, of course, with more interesting conversations coming up, and of course setting you where to put your money next. We have Rapid news broadcast coming up at 12, so keep it here on Rapid TV. My name is Faith. Bye-bye.